Hey, what's happening, guys? Dan Dario here with another Options and Play video update. We are officially into earnings season. Well, at least as of tomorrow morning, banks get us going, and it, earnings are going to come out fast and furious, and basically over the next 2 to 3 weeks, it's just going to get busier and busier and busier. Now, a lot of the focus obviously, around earnings season is when the companies actually report earnings, right? But that doesn't mean that all of the trades, specific earnings related trades, have to wait to the day of the report, right? I mean, what I find, and this isn't a scenario that's unique just to this quarter or even to last quarter, is that there can often be some really great action right up into the company's reporting, right? Because you have people positioning for earnings. So whether that's bullish positioning or bearish positioning, right? If people expect the numbers to be particularly bad, there just tends to be movement on certain stocks or some stocks right ahead of earnings. So maybe like the week ahead, the 2, 3, 4 days ahead of earnings. But what I find is that game planning like a week out, 2 weeks out can really help me screen for these types of patterns, right? Because if you wait till like the day of earnings and you just check the calendar, see who's reporting after the close or before they open the next day, then I do think you miss a lot of potential good patterns out there, right? And what I like to do, and obviously why I create those videos each Friday, is to kind of get you to think about the week ahead, right? So game plan in advance, not just leave everything till like the last day, because there are opportunities ahead of time, right? So JNJ. Now, I knew coming into this week that healthcare was going to be interesting because XLV looks. I haven't. Oh, this might as well put it up. XLV looks very, very tight consolidation right underneath its high, right? So just kind of hanging out, looking for either a breakout or breakdown. Now, knowing the two major components or the two highest weightings in XLV reporting this week, JNJ, UNH, odds are I figured healthcare is going to be in play, right? Now, looking at JNJ, this stock has a very, very consistent history of pretty solid numbers. The stock doesn't always react well to those numbers, but the numbers themselves tend to be pretty solid, right? So when I saw it consolidating above moving average cluster range, right? And right at the top of this like 2 to 3 month downtrend, I thought it could be in a nice position because the market was acting strong. The stock is showing some encouraging bullish action, and not to mention it's had a pretty consistent history of solid quarters in a row, right? So it seemed like it was in a good. It seemed like it created a good pattern for what I call a ramp into the report. So that's why the trade was initiated last week, right? Ahead of time, because I'm thinking of a move taking place prior to the numbers coming out, not on the actual report, right? So obviously JNJ has worked out nicely, and the stock is breaking that downtrend that you can see, and it's clearing 50-day resistance. So the options that were entered into last week are now up a lot. And what I like to do with these ramp into reports is to really scale back risk ahead of time, because you catch the big move and now you have the ability to scale back risk. So whether that's closing it out totally, take the money off the table, whether that's potentially turning it into like a straddle or a strangle, right, adjusting the strategy, or what we look to do with this trade specifically was sell further out of the money calls to really reduce risk, right? So with the stock going up, then the calls that are further out of the money than the ones we entered are actually appreciating too. So you might be able to either drop your risk in half by 50%, 60%, or even in some cases, if you timed it well, you might be able to turn the net debit, the debit strategy into a credit if the calls further out of the money are actually worth more than the lower ones you paid for a couple days ago, right? So once the ramp into the report plays out, the key is to really reduce risk ahead of the actual print. Okay, so it's not taking full boat risk into the numbers. The goal is to reduce risk ahead of time to put yourself into like a good position going into those numbers. All right. So again, I mean, the highlight or the goal of this video is really just to highlight the worth of game planning. Right. So looking ahead, um, getting an idea of what's on the calendar for the next couple of days, the next maybe week to week and a half out, so you can kind of get an idea whether there's anything that sets up well maybe for a rally or drop ahead of time, right? Because again, a lot of action does occur right ahead of the numbers, right? Like Netflix is another one, just ripping ahead of numbers, right? So these trades do happen fairly often, and I think if you're just waiting around to the day of earnings to check the calendar, I think you're missing a lot of opportunities. All right. So if you like this video and you're looking for more earnings trade ideas with options, especially as we get into earnings season, please follow up with the link in the description of the video for more information on options to play. It's going to be a lot of interesting trades coming up this quarter. I'm convinced of it. All right. So have a fantastic night. Stay well, and I will talk to you all tomorrow.